It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast as we dive into the Australian property market with our weekly conversations. Yes, we are talking to the biggest names in real estate, and if they don't know what is going on, we're in real trouble. How are you navigating the terms and conditions that have been forced upon us from this Iran war conflict? As I said last week, even if it all stops today, it is a nightmare to get us back to where we were pre-Iran-US conflict. And if you have thoughts on that and how you are coping with prices escalating, you can send us a voice message. We'd love to hear from you below. Or you can email us, myrealestatepodcast@gmail.com. We are at the end of our working week. It is a Friday, March the 27th. And I see on this day, back in 1998, the FDA approves Viagra in the US. Global pharmaceutical markets changed overnight, and so did a lot of marriages. Let's have a look at those birthday calls if you're celebrating your birthday for today. Nathan Buckley, AFL legend and former Collingwood coach. He is celebrating his birthday, and many happy returns. Now, big question to talk about this morning. To fix or not to fix is the question a lot of homeowners are asking themselves right now. With the cash rate sitting at 4.10% and the talk of another possible rise in May, it's an understatement to suggest that there's concern of uncertainty in the air. And off the back of that, Anthony Landau, the Managing Director and Mortgage Broker at Equilibria Finance, is right in the middle of these conversations every day. So it is a great time to get his take. And good morning to you, Anthony. Welcome on this Friday morning into the Real Estate Breakfast. It's been a really busy week, hasn't it, internationally, as people try to adapt?
Yeah, good morning, Craig. Great to be here, and a lot going on globally at the moment, and there's a lot of ripple effects, obviously, through to Australia with petrol prices and how it might also impact the housing market over time.
Certainly is. The cash rates increased. Different lenders, now they tend to respond in different ways. Some of them move quickly, others take a more measured approach. It can create confusion for borrowers trying to keep up. What is your take on how the banking providers around Australia are responding to the moment? You know, the latest rate rise from the RBA mixed in with everything else. Yeah, well, essentially over the past week, lenders have been passing on the full 25 percentage point increase to borrowers on their variable rates. So that's lifting repayments across the market. For mortgage holders, this comes on top of the February move. So for many households, we've seen rates increase twice in a pretty short period of time, putting additional pressure on monthly budgets. And obviously just touching on what's happening with petrol prices, there's a lot of households that are really managing a cash flow squeeze at the moment. Just an interesting point as well, globally interest rates are elevated, but now Australia is essentially, their cash rate is above a lot of the other countries, the USA, the Euro, China and the UK. Australia's cash rate now at 4.1% is above that. Fixed rates have also been moving higher in recent weeks as markets have been pricing in, I guess, further expected rate rises. Yeah, and when it comes to mortgages, it does come down to those two main options that I mentioned, to fix or to use the variable rate. Each does have its place depending on timing and risk appetite, because you've got to have either one of those, but the gap between them can shift quickly, and understanding where the rates currently are is what is key in all of this. So where are the rates for both fixed and variable at the moment, since I've got you there? Yeah, it's incredible how quick this has shifted. It was probably 3 to 6 months ago. We had fixed rates under 5%. We're now getting most fixed rates over 6%. There's some 1 year fixed rates that are still under 6% that some people are trying to lock in.
But generally speaking now, the 2, 3, 4, 5-year fixed rates are now over 6%, some of them well and truly over 6%. The 1-year fixed rate sitting about 25, 30 basis points above where variable rates are sitting. But essentially, we've seen fixed rates move quite rapidly in the last couple of months, and we've also seen fixed rates move since the last interest rate rise a couple of weeks ago, and also subsequent talk about another rate rise in May. So a lot of movement on fixed rates and a lot of clients looking at what are our options? What should we do in this difficult environment?
And as a result, all of those discussions around the dining room table are taking place. As you say, do you lock something in or do you want to stay flexible? Everyone's situation is different. What advice, Anthony, from a mortgage broker do you think are some of the key considerations when it does come to fix or not to fix?
Yeah, it's a really good question. And in an environment like this, it's a lot about risk appetite and comfort. There's a lot of uncertainty about will we get another rate rise in May. In fact, AMP came out yesterday suggesting we might get 2 more rate rises in May and the following RBA meeting, which would be another 50 basis points. So a lot of it is around what's your risk appetite? Do you want that certainty around your repayment? And a big part of the conversation as well is how much flexibility do you want with your home loan? For example, if you've got a large offset balance, variable rates are much more suited to having an offset link to it. If you're making additional repayments, variable rates are a lot more appetizing to be able to pay the loan down quicker. If you're looking for more flexibility, if you've got savings, if you've got offset, if you're able to pay the loan down quicker, variable rates remain reasonably attractive. There is also the option of obviously splitting your loan, having some of it fixed to maintain that certainty and having some of it variable. It's very much around how much people's risk and what sort of comfort they're looking for through this time. Very, very tricky environment, and we really are looking case by case at the moment.
Yeah, it is a tricky environment, no doubt about that. Anthony Landau is with me on our Friday morning where my coffee is waiting for me, smelling pretty good. Coming next, how are you coping with stress given the cost of living? We'll talk about that after this.
Every week, unravel the real estate market to help guide your real estate journey. Eager to expand your property expertise? Enhance your real estate know-how with us. Your real estate journey starts here.
Hey, here's a little bit of Australian real estate. I want to take you back to the early 2000s. A typical house in Brisbane could be purchased for around between $250K and $300. At the time, many analysts, similar to Sydney, warned that prices had risen far too quickly after the late 1990s boom. But within 2 decades, median house prices in Brisbane would pass $800,000. And then growing into that median that I mentioned yesterday, in excess of $1.1 million. Wow. It is a Real Estate Friday. Looking forward to the weekend coming up. Oh yeah, we need some breathing space, don't we, before Monday arrives. Anthony is with me, and there's no doubt that people are feeling pressure right now. The cost of living is up. Uncertainty is high, and that all feeds into how people manage their mortgages going forward. It's not just the numbers, it's stress and lifestyle mixed in as well. So what advice, Anthony, can you give to people trying this morning to manage their mortgage right now?
Yeah, really good question and very relevant for now. Essentially, for people trying to manage their mortgage, a couple of considerations are make sure you really understand the impact of the rate rises and start planning for that. If we're expecting another 25 basis point increase, if that's going to be another $50 or $100 a month, start looking at that now in your budget. In fact, start trying to make those repayments now to have a little bit of a lead up to the actual impact of the rates. If you can pay more off your loan, do that because it lowers the interest payments and helps you with the amortization of your loan being a lot quicker. So make additional repayments. And thirdly, if you're able to pay more regularly, it's a great idea. So if you can bring your repayments forward from monthly to fortnightly or weekly, that again will lower the amount of interest you pay off your loan and amortize the loan a lot quicker. Couple of other quick tips. Any spare funds, put it onto your home loan, put it into redraw, put it into offset. And genuinely, if you're having hardship or struggling to pay your loan, talk to your broker or the lender because they are there to try and help with these situations.
Yeah, good advice. And in these times of uncertainty, you talk about the offset account. Has there been a more important time to make sure that you get that right, that offset account? Boy, that just saves you a lot of pain if it's done correctly.
Yeah, it can save a lot of interest over the life of the loan. So if you have got an offset account, which is essentially just a bank account, if you've got $100,000 in it, it'll lower the interest you pay on your loan by $100,000. You still make the same repayments, but you pay less interest. So over time, the loan gets paid off a lot quicker. Get your salary put into your offset account. Just have as much money in your offset account as you can to make the most of that. And over time, it does have a big impact on the interest payments you make.
Hey, a very good morning to you if you are at the moment listening to us from the Gold Coast, where there's renewed attention with these discussions around a proposed Trump Tower Gold Coast development. Could there, though, be a worse time to have this project out there being talked about on the Gold Coast with the name Trump attached to it? Projects like this tend to generate both excitement and debate, particularly around foreign investment and foreign branding on Aussie buildings. And if you've got a comment to make about that, you can leave a voice message below or you can send us an email. Anthony, yeah, it's interesting, isn't it? Trump in the Gold Coast.
Yeah, well, in one sense, it's not bad timing. Obviously, we've got a housing crisis. Units are an attractive proposition, an attractive price point. So from that perspective, I guess it's a positive thing, wanting to plant the biggest building on the Gold Coast. We'll see what develops and evolves, I guess, over time, whether it's a headline or whether it actually gets off the ground. But any new housing is going to help the market.
Yeah, and if you're a Trump hater and you're living next door to that development, we would love to hear from you. All right, that'll wrap us up on our Friday morning. Have a great upcoming weekend, Anthony, and talk in a couple of weeks' time.
Sounds like a plan. Thanks, Craig. Have a great weekend, everyone.
Have you missed one of our episodes? Whatever you are looking for, you'll find it right here.
They can work, can't they, tiny homes, as a short-term rental. You've got the secondary dwelling or even land banking strategies.
The last 12 months, we've seen a massive growth in investors reaching out to us where people are starting to see it much more of as an investment strategy. We're seeing astronomical numbers at the moment on average, even in lower socio areas, getting over $400 per week for very little spent.
I saw something just recently from you guys, which I thought was a great idea. You've put a 20-foot shipping container on top of a 40-foot shipping container.
I have one of these I stay in when I'm traveling for work, and I have the 40-foot down the bottom, which has the full bathroom, kitchen, everything you kind of need to live in. And what we actually did was I built a 20-foot office and placed that up top of a crane. And then I've got a beautiful 6-meter deck as well. So it's got panoramic windows the whole way across, and it really kind of separates the living from working space.
The residential market in Dubai has enjoyed a price bull run for more than 5 years now. But one of the things we are keeping a close eye on is the rising volume of residential supply. Now, for the next 5 years, we're tracking about 350,000 homes that could potentially be delivered by the end of the decade, which works out to about 70,000 homes a year.
We connect you to the best real estate information across Australia. The Real Estate Podcast.